Excellencies, distinguished guests, ladies and gentlemen, thank you very much for coming to this very special event, jointly hosted by the UNDP Insurance Risk and Finance Facility, Islamic Development Bank, Islamic Development Bank Institute, together with our distinguished partners and panelists. This session is termed Delivering Financial Resilience to Climate Risks through Takaful. We have a very exciting program for you today, featuring a panel session, a launch of the report, and of course, more importantly, brainstorming and discussions. To kickstart this event officially, we have a very special guest, someone who I've looked up to because of his experiences, diverse experiences, and his involvement as a leader, not only in organizations, but also at the level of a country. Mr. Abdullah Al-Dardari, the United Nations Assistant Secretary General. May I please invite you to please give us a keynote remark. Thank you.
If you don't mind, I'll stay here because they put these things on and I can't move. Yes, even my colleague told me to fix my jacket and then it doesn't work. So I'm sorry, Essen, I have to look awkward. So, welcome. It's an honor and a pleasure to be with my brother, Nasser Basha Al-Qahtani, a leader in development in our region. We have many adventures before. This is not going to be our first or last cooperation. We actually worked on microfinance in Syria. And I saw your work growing in Yemen and all over the Arab region now. And what a fantastic adventure. I also, now at UNDP, we are also starting this new initiative for Takaful, Islamic insurance. And we believe that this work, we are aiming to reach 100 million people in the region. And if that works, it will open for us gateways to accessing finance by all, not only just credit, financial services and financial inclusion, way beyond the Arab region. We want to go to Africa, we want to go to Asia, and everywhere else. Just one word. I have something to say during the panel discussion, but in opening remarks, I just want to say, in every panel I've attended so far, there is this dilemma we are all facing. Finance is not reaching where it should reach. Finance and international financial institutions and banking sector is not designed to reach the small farmer in a remote area. And so our job is to make sure how do we facilitate that bridge which brings money to those farmers. If we manage to do so, plus extension services and technical assistance and infrastructure and all of that, I think the question of sustainable management of water and agriculture and food production will see a paradigm shift. It is the farmers that understand sustainability much better than we do. It is the farmers who take care of their land and of their water much better than we do. It is the farmers whose interest is to produce food and sell it. If the market signals are correct, that's another duty we need to work on. Takaful is one way that will open the doors, wide open. And I must stress, Takaful is not something only Islamic communities can benefit from. Takaful is a financial product that can actually be suitable in any culture, because people anywhere around the world believe in solidarity and believe in taking risks together. And that is a key point why Islamic finance is so robust and successful, and it's the fastest kind of financing that is growing around the world today. I'll stop here now, and then I still have a few things to say. My colleagues wrote excellent stuff for me, and I will read it from here. Thank you. Is my jacket okay now?
Thank you very much, Excellency. And you just reminded me of your sense of humor as well. So it's very, very important points you mentioned, that Takaful is not a sort of like a religious product, but it's open for every. And to further explain to you about this partnership, we are in fact launching one of our reports today. The reason I say one of ours, because this is definitely not the end of the road. We will have more work, more publications, more initiatives, more efforts going forward. But let us start with at least seeing what we have achieved today. To present to you this joint report, we have two very interesting colleagues, because they are not, if you look at them, you wouldn't think Islamic finance traditionally, but this is a proof. Don't steal our jobs, but no. May I invite on stage my good friend, Dr. Bradley Hiller, who's the lead climate specialist at the Islamic Development Bank, and of course, Ms. Lauren Carter, who's the deputy head of the Insurance Risk and Finance Facility. Please come and share with us some of the extracts from the report. The floor is yours.
Thank you so much, Faik, and thank you for the opening remarks. We appreciate that. And we'll just switch across to we have a PowerPoint presentation.
It's coming.
Which is coming. Okay. I'm not sure the people on the panel are unfortunately facing the wrong way here, but agility. Okay. Yes. All right. Yes. So what we'll do today is we're going to co-present some of the findings from the first report, as Faik said, and we're interested to share these with you. Okay, so I may have to also look over here. So firstly, we just wanted to start with some general statistics about climate threats, which we all know are growing very rapidly, but some of these figures are quite confronting. So there's an estimate that climate change will cost 10% of global GDP, or US $23 trillion annually by 2050, which is significant, displacing over 216 million people in developing countries. Job losses from heat stress alone are estimated to be about 80 million by 2030, and total global economic losses exceeding $178 trillion over 50 years. These numbers are very hard for us to process, but, and this is at a general level, but then if we move down into Muslim communities, currently at least 15 of 30 countries that are most acutely threatened by climate change have Muslim majority populations. And this comprises about 1 billion people or more. And these numbers are even higher if nations with Muslim minority populations are also included. So again, these are large populations that are increasingly vulnerable and exposed. In these countries, some of the key climate risks are, as we may expect, extreme heat waves and droughts, floods, cyclones and hurricanes, sea level rise, desertification and wildfires. And just as an indicator of recent events, there was 200 disasters in Organisation of Islamic countries between 2021 and 2022 alone, which led to $23 billion in losses, which again is extremely significant in a short period of time. What we see is the poorest communities are hit the hardest, and these are the ones that are also underserved with support mechanisms. So we know that 2/3 of low to middle income countries with sizable Muslim populations are critically unprepared for climate change. Now, what do we mean by this? We mean that they have low financial resilience, and they're also ranked in the bottom half of the Climate Vulnerability and Preparedness Index. The impacts of climate shocks are already severe, and we see this in some countries very distinctly. For example, Pakistan and Bangladesh, which have a combined population of about 450 million people, rank among the 10 most affected countries by climate disasters in the past 2 decades, and each incurring GDP losses of around 10%, which are huge numbers. In terms of key sectors exposed to climate change, agricultural sector is one. We see declining productivity, heat stress and water scarcity and loss of livestock and disease. There are also significant challenges faced by MSMEs through the supply chain and declining incomes as well. Socioeconomic vulnerabilities and livelihood can often spur urban migration, health crises, and also rise of conflict and violence due to scarcity or insecurity. And then in terms of infrastructure, there can be damage to key energy, water and transportation services. And we know about coastal erosion and flooding and these types of things as well. So this is a table here, and it's looking at the, again, the surging climate disasters and the meagre responses at the moment. And here's a summary at the top here. Over the past 5 decades, we've seen a 5-fold increase in the number of annual disasters, a 4-fold increase in annual damages in dollar terms. 50 million people are affected annually, and the insured damages are only 2.7%, so less than 3%. And you can see along the bottom here, it's a bit hard maybe at this scale, but one of the emphases is that between, say, 1970 and 1980, a decade, now some of those figures, for example, there were 225 total disasters in that decade, and alone in 2021 and 2022 we had 213, so almost the same amount. And so you can see that this is, these are huge numbers over sort of a compressed period. Again, these are some tables here, and what we look at is, is insurance penetrating, or is it accessible to communities, and also what is the density. And we can see in the statistic here that insurance penetration, which is non-life, as a percentage of GDP at the global level is about 4%, but in the countries with the largest Muslim populations, this is only 1%. This covers urban and rural, so in rural areas it will be even lower. And then the insurance density, which is the dollars per capita, is $22 per capita in the top 10 Muslim countries in terms of population, and this compares to 500 at the global level. So again, some huge differences. Again, the penetration of insurance is about 4% globally, but in countries such as Pakistan it's 0.3%, and others it's around 1%. So again, there's a lot of progress to be made here and a lot of opportunity to increase Takaful. So what is Takaful? And I know some people are probably familiar, but we have people online and others. So Takaful is a Sharia-compliant alternative to conventional insurance, emphasising mutual, ethics-focused risk-sharing practices. It differentiates itself from traditional insurance by avoiding elements such as interest or riba, excessive uncertainty, gharar, and speculation, masir, which are prohibited under Islamic law. Takaful operates on mutual assistance principles where participants collectively contribute to a fund to cover claims and associated costs. And this approach aligns with Islamic finance principles of voluntary contribution, tabaru, and solidarity, ta'awan, apologies for my pronunciations as well, for the greater good. And in Takaful, protection is derived from shared responsibility, promoting shared ownership and reasonably minimising profit-driven motives, and it offers a mutual model for insurance based on the principles of camaraderie and mutual care. So key features are ethics-focused, community solidarity, customisation, and it's also asset-backed. Why are we focusing on Takaful? You can see on the right-hand side, Takaful is aligned with several of the SDGs, which is a good start. So by providing access to this, we can achieve contributions to some of these goals. But let's look at what potential offers, but also some of the challenges. So in terms of potential, it offers financial protection and risk management. And for some of the communities that we're looking at, this could be for crops, livestock, assets, income, health and life protection. It's also an empowerment, so this can be inclusive for stakeholders that are excluded from traditional insurance products. And it can help build community resilience. So this supports collective action, social stability, and self-reliance in managing climate risks. And then we look at the challenges. Why is the penetration not as high as in some other parts of the world? So Takaful is available to all, as Excellency pointed out, and this is a perception that people think it's maybe not the case. But it often also suffers from limited awareness and understanding. We do have some operational and technical limitations, limited data, for example, on potential customers and practices, risks and actuarial capabilities, and also limited digital capacities compared to some other forms of insurance. And then finally, there's some regulatory and legal barriers, so there needs to be clear support frameworks required. So what I'll do now is pass over to my colleague Lauren, and she'll run through some of the positive findings and opportunities. Thank you.
Thanks, Brad. And thanks everyone for coming here today. So I'll pick up on actual case studies and solutions where Takaful has proven to be a successful solution to managing climate risks in areas where these types of products are desperately needed. So for starters, we can talk about Pakistani farmers. There was a Takaful scheme set up in 2017 to support Pakistani farmers who are historically 40% of the country's workforce and are therefore highly climate vulnerable. And this product was set up to cover crop losses. It's currently covering about 227,000 farmers, but it aims to scale up to 3.5 million by the end of 2023, so fingers crossed, that's a month away, by providing efficient payouts after climate shocks through a parametric product to secure incomes and resilience for vulnerable farmers in Pakistan. There's another case study also in Kenya with livestock and pastoralists for climate resilience, an index-based, which means that it's based on a parametric trigger, which could be, for example, climate temperature or a lack of water or rainfall. This is a product that manages livestock loss due to recurring droughts, but also other perils that are faced by various pastoralists. And then lastly, there's also an example of Takaful being successful in Sudan for vulnerable climate communities, focused on wheat farmers. And this also, like other parametric products, relies on a weather index insurance product to pay farmers out in a timely way where they make sure that they are able to kind of continue to support their livelihood activities and their families. The report has more examples. But then we move into the recommendations phase. So how do we actually take some of the challenges and advantages as addressed by Takaful and look to action? What needs to be done to scale and build Takaful in this space? So for starters, we need prioritized policy actions for unlocking Takaful for climate resilience. This involves establishing dedicated Takaful promotion initiatives, as well as developing tailored regulatory systems and fostering international collaboration. So I think that all of us being here today is a great first step on that. Strategic steps for national integration of Takaful for climate resilience is also critical. This can be done by conducting climate risk assessments and gap analyses, but also incorporating Takaful as a resilience building tool in national strategies and developing mechanisms for Takaful integration into climate finance. Continuing the recommendations, utilizing Takaful at the sovereign level to address climate challenges, so exploring Takaful for sovereign risk transfer schemes, as well as resilience building, and collaborating with national and international financial institutions. So it's very apt that we're being hosted today in the MDB Pavilion, where many people are in a position to take action on this. Collaborating as well with national and international investors, and deepening Takaful solutions for climate-related sovereign needs. Next is fostering public-private collaboration for building climate resilience using Takaful, so promoting collaboration between Takaful operators as well as public entities, and attracting private sector investment in Takaful initiatives, which is a missing and needed step in terms of scaling options in the space. And then fostering knowledge sharing and capacity building for public-private partnerships. Lastly, seizing on the opportunity to provide inclusive climate risk solutions, developing sustainable business models is vital to taking forward Takaful and incentivizing private sector to get involved, as well as ensuring the creation of inclusive and affordable Takaful solutions for climate risk. Investing in Takaful technology and technology integration is also critical, as well as identifying the relevant distribution networks for activating Takaful and empowering communities to take up Takaful as a way of breaking out of the kind of cycle of vulnerability and resilience in vulnerable countries. So this is our report. We're proud to launch this today, and you can download it using the QR code on the screen. This outlines a lot of the different examples that I just went through, but also it goes through more. And it outlines clear policy recommendations for countries and decision makers around the world to consider as they take forward their Takaful inclusion policies, and looking forward to sharing this with you, and also the part 2, which expands on this coming soon in 2024. So with that, I pass back to our MC.
Thank you very much, Lauren Brad. So with that, the report is now available to download. All of the viewers who are online, the QR codes are on your screen. Otherwise, you can follow the social media handles of the UNDP IRFF, the ISDB Institute. You will also get links to download the report from there. But now it's time for the intellectual brainstorming and discussion. We are going to move towards the panel session. And of course, the panelists are all very senior people, so they're my mentors. I've learned a lot from them. But to moderate this event, we have another special colleague of ours, Jan Kellett, who heads the IRFF, the Insurance Risk and Finance Facility. And one personal thing I want to share is my first introduction with Jan was in a panel last year, which I was moderating, but somehow along the lines, he took over my role and I was responding to his questions. But there is more to that story. I will let Jan introduce what happened last year's panel. And, please also, please do take over his role when he's moderating the session. All right. Welcome, Jan.
Interesting introduction. So have we introduced the panelists, by the way? Did we do that earlier? So maybe I start with that, and then I'll just say a few remarks, if you don't mind. So I think it's proper to do so. So first of all, thank you everyone to be here today, and it's great to be here with ISDB and really our family and working in this space now. That's how I see it. So we have an excellent panel here. We have my dear colleague, Dr. Abdallah Al-Dadari, Assistant Secretary General, Assistant Administrator, and Director of the Regional Bureau for Arab States. Abdallah, it's great to have you here. We have our friend, Dr. Nasser Al-Khattani, Executive Director of AGFUND, who is here. And then we have Ms. Magdalena Mohammed, Director of the Sustainability Unit, Bank Negara of Malaysia. Thank you very much for your agreeing to be with us here today. So maybe just as a few comments to pick up on what Syed was saying. So yes, we did have a panel last time in I think it was the Islamic Development Bank Pavilion, and it was a joint MD Pavilion. Thank you for the correction. Full circle. And it was on a range of issues around Islamic finance. You were presenting a report that you had done with the Islamic Development Bank and ADB. It was not a well-populated panel. Just to let you know, we just want to be really honest here. So at the end, there was 5 people. And if you remember, I said I would give a reward to the single person who stays here at the end. And then we found out that 4 of the 5 people were actually members of the same team of the panelists. So there was one valiant doctor from somewhere in Australia, scientist who was there, and we gave him the reward. But the other thing, which I can't remember now. It was a free thing that Islamic Bank was giving out anyway. But I think what was interesting is we actually, because of this, in a sense, we had a certain freedom to just start to talk about things. So the whole 5 of us representing ADB, Islamic Development Bank, there was an international consultant, and there was one other person and ourselves, we just started to think about some of the issues that were addressed. Now, we were asked to talk about financial resilience, or perhaps the lack of it, because I lead UNDP's global work on insurance and risk financing. And the data which we've even heard this week is terrible for financial resilience. It is absolutely terrible. I'll just give you 2 statistics, if I may. Sub-Saharan Africa, which of course there are many sizable Muslim populations in Sub-Saharan Africa. Only 3% of the population, the entire population, have insurance of any kind. So that means 97 of every 100th person has no insurance over any aspect of life and living. Ironically enough, or maybe not ironically, smallholder farmers in Africa, only 3% have insurance of any kind. And that's great, right? For example, AGFUND is working in this space. We're working in this space. But actually, the amount of investment into financial resilience in Africa and in many other places, including the Arab states, is pitifully low. So that's one thing we're talking about. Just to give you another example, quite close to our home, Pakistan, which of course had terrible flooding back in 2011, $33 billion of damage. Now, we estimate, I think, less than 5% of public and private assets were covered by insurance. So that means a country like Pakistan, heavily indebted country, unfortunately, borrowing new money in order to rebuild, and having to do it essentially with new money because there's no private insurers, there's no public insurance, or very little. And that's really why we're here. And actually the journey, for example, of our work together on Takaful, and indeed the Takaful Alliance, which you spoke about, Abdallah, that started there. We started to think together, what are the things that we need to do, we must do in the international community in order to build the financial resilience of, in this case, Muslim communities. And I'm just going to make one final point, because as you mentioned, Dr. Abdallah, it is not an Islamic product. I think that's, I'm also learning as I make this journey as well. The way in which we might consider the financial resilience challenges when we talk about people and businesses and communities. So on the one hand, we know there are rising risks, and they're very severe indeed. Secondly, we know that there's not necessarily a great regulatory or institutional or legal background for insurance of various types. Thirdly, we know there are issues with payment. Fourthly, we know that people maybe don't know what insurance is for, or they're not aware, they don't have that sort of consumer education. So all of those issues exist in all the communities of the world where there is weak financial resilience. But in Muslim communities, there is this additional hurdle barrier, which is, those social or religious or cultural sensitivities around how insurance can operate. And that's what we're here to talk about. So I apologize for that extended introduction, but now I would like to, if I may, ask a few questions. So, first of all, I would like to go, excuse me for one moment, I have lost the questions. That does happen when you're having, so you're not allowed to take over yet, but thank you very much. Is it rude to replace a panelist before she has answered a question? I don't know whether that's the protocol.
Start with Magdalena.
Now I will have to start with Magdalena. And I've decided, instead of the easy question, I'm going to give you the toughest question. No, maybe with all seriousness. So this is the question for you, if I may. So it's, first of all, a pleasure to have you on the panel as a representative of Malaysia's Bank Negara, which is the central bank, if I'm not mistaken. And we know that Malaysia and also Bank Negara has been a strong supporter of Takaful. We'd like you to share your insights on how you've worked to develop Malaysia's regulatory landscape to facilitate the growth of Takaful. What lessons can you share with all of us here and, of course, other countries looking to do the same? And what do you think we can do at the global scale? How can we take what Malaysia has done and export it to elsewhere? And I do apologize for that being essentially 5 questions in one question. Okay.
So you see, I can moderate now. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon. I'm happy to be here, and thank you for inviting me. Well, I would say that in the case of Malaysia, we took a pragmatic and we took a progressive approach in developing the Takaful industry. And in fact, it was not just the Takaful industry, it's actually the whole Islamic financial system. So, and in fact, next year marks the 40th year since we first set the Takaful legislation, the Takaful framework. So I think over the years, what we have done is actually, to approach it from, a phased approach. So we started off back in 1983. That's when, the legislation was put in place. And sorry, 1984. 1983 is actually the banking sector. So the Takaful Act was actually put in place in 1984. And what we did was, in the initial years, the focus was more in terms of, putting in place the regulatory structure, putting in place the legislative structure, getting people to understand. And I know there's been a lot of mention that Takaful is Islamic insurance. I will beg to differ. I think, because it's a totally different system. You're talking about a risk sharing as opposed to insurance, which is actually a risk transfer. So I think that is actually the most distinct differentiation that we need to educate people, because that actually helps to explain how it works and how is not actually the same as insurance. So the initial years, the focus was to put in place all the regulatory structures and so forth. And as we have more and more players into the market, that's where we start looking at, okay, how should the regulatory structure respond to that? From one single institution to a few institutions, and we also started to create the ecosystem. And I think this is actually important, because if you want to develop a system, it has to be well diversified. It has to be a complete infrastructure that has to, be there. Because you asked about, some of the lessons. So that was exactly what we did. And it's not just on the regulatory and supervisory infrastructure, it's also the ecosystem. So talking about talent, you're talking about people. So people with the right set of mindset, right set of capabilities, competencies. So what we did was we set up specific institutions to focus on, developing talents. We also, and when we talk about talent, it's not just at the technical level. It has to go all the way up to the senior management, to the board. And we started putting in place certifications to ensure that it's not just any Tom, Dick, and Harry, but someone who is really qualified, to do it. So that was how we have actually progressed it over time. And I would also say that in the initial years, when we first started Takaful, it was intended for purposes of addressing inclusion. So we do have the Muslims population, which would not, go for cover because the insurance system is actually not Sharia compliant. But as you mentioned, Abdullah mentioned, Islamic finance and Takaful included is actually not just for the Muslims. It's actually for the whole community. Again, it can benefit, and it has actually a lot of potential. So, and that has also been our own experience, where initially it was actually primarily the Muslims that actually came into the to purchase to take cover, but now over time more and more we see the non-Muslims, because they understand the difference again between Takaful and insurance. And they understand, why, how Takaful can actually benefit and meet their specific needs much better than, an insurance contract can. Shall I pause there first? Yep. You have more questions for me?
I would just like a follow-up, if you like, that last question you mentioned. So when we had the panel back in the back a year ago, I was just mentioning, as not a Muslim, one of the things that I love about Takaful is it sounds like a human solution. It's the way in which I feel that people should consider themselves sharing risk and how they operate within the community. And it's interesting, there are, if you like, cooperative and mutual insurers in some parts of the world which have quite similar models, because they're owned by essentially their clients. So they are part and parcel of the whole structure of risk sharing. But maybe I can just take, because we were asking you about your lessons learned, this point about this being a tool for financial resilience, which is all about, risk sharing. Is that part of a lesson that we can sort of, if you like, share with others around the world? And how might we share that?
Right. Yes, I think one of the lessons that we learned was, again, how we approach it. And as I said, I think we started off with an inclusion in mind, but over time, it's really about building the resilience of households, of businesses. And in fact, currently we are in our fourth phase of the Takaful, well, and in fact, the whole financial sector development. And what we are saying is that finance is actually finance for all, finance for transformation, and finance for sustainability. And within all these three pillars, Islamic finance, Takaful included, will have a specific and, in fact, a prominent role to play.
Okay, thank you very much. Well noted there. What I would like to do now, if I may, I'd like to go to you, Dr. Nasser. Pleasure to have you here. Thank you very much. So UNDP is working with you on a range of different initiatives, targeting, for example, vulnerable communities and smallholder farmers, which, of course, came up recently in the events that we did together in MENA at Climate Week. In your views, it would be interesting to get your thoughts about Takaful and how it's been used in your programming to date. And how do you see Takaful being leveraged perhaps more in your current activities or through your work with your financial inclusion banks? And how do you see it as like a long-term financial resilience against shocks and hazards, and how might that work? Those are my multiple questions for you.
Oh, that's. Thank you very much for inviting me, and thank you for Dr. Abdullah for his initiative in the region. Really appreciate it. We see things is moving, and bring such action. This is go back to the relationship between AGFUND and UNDP during the 80s when we started. The partnership happening, and some of the people, and this is for a long-term journey. What we like it about UNDP, they always working with the challenge. So an AGFUND partner with them all the time, to make sure not to leave anybody behind. So what you're talking about it today regarding Takaful, that take me back to 1995 when we start talking about microcredit, microfinance, should the system. The whole journey prove that the whole financial system is not, including poor people, or the people we are talking about them to include them. If you look at all the goals today, 17 goals, not to leave anybody behind, how can we do it without financial inclusion? So today, look at when 1995, people cannot be allowed to get a credit, a microfinance. Today, it's a proof, and working too closely, when a microcredit that time was happening. Today, thanks God, now it's a proof that microfinance is a strong tool to alleviate poverty, to empower women, and etc. But the whole system until now is not aware of how we include these people easily, because AGFUND, when we do Takaful or Islamic product, we realize that we are doing it because not just because it's Islamic. We want to include Muslim in the system. So it's not fair to exclude anybody, no matter what they believe. So we found out a lot of people, and thanks for Malaysia, they are ahead of most of the people. Nobody applying financial, system as it should be. There is no loan in financial when you comply to Islamic without insurance and Takaful. And most of people doing this. So going back to the challenge we facing today, and the challenge we facing, that's where we met it now in achieving the 17 goal with the 6th transitional, which is accessible energy. I'm not talking about accessible of everything. Everything if it's accessible, affordable, sustainable, not just energy, even financial, even Takaful. And we have to look at this as something could be profitable. Don't look at the profitable that means poor people cannot afford it. No, make it affordable and accessible. So this is where the microfinance started, giving a small loan, particularly when we talk about small farmer. Imagine today that a small farmer, when they have a mobile, they are digital connected. And they have a mobile, they could have a wallet. So they could do payment. With the problem is paying for the insurance. They could do remittances. They could do saving. Some of the people say, they have no money of saving. You know what's microfinance doing? There is a loyalty points. So we started this as a saving for them, and they get a loan with a guarantee. So talking about Takaful is the most important thing, and thank you for the report. Anticipating risk is most important issue. And we didn't know that we could do forecasting and everything. Believe me, we didn't know that. It was so easy. And the problem is not just anticipated. Everybody know that what happened in Pakistan 2009, and it's repeated in 2019, and it will come before 2030. So that's very well known. So the problem, we did not come up with the product and services to meet that in terms of insurance. So that's where we are in AGFUND when we receive the forecasting for the weather index in Sudan. We brought this. We couldn't find an insurance company could do that. And even the small farmer doesn't know what insurance is. What we did, we go beyond. We developed the seed to be climate change resistant, and we include with the feeds as an insurance with the seed, because it would take me 2-3 years to educate a small farmer to pay and also. So when they buy the seed, they are already, you get the code, and the code with the index, and receive all the information. This is now is available in Sudan. And by the way, during the crisis now, the small farmer, with the help of the UNDP, of course, we're working together, and they are working now. And they get insurance, and they get pay, and the most important thing, they mention it, supply chain. How can we make the supply chain this? That's why in AGFUND we make mapping. We did supply chain, and we financing 2 crops, peanuts and Arabic gum in Sudan, because this is the crop could be exported even aside it, and there's a lot of people could buy it. And as well as we now replicating this is with the partnership with the UNDP in Yemen for coffee, and in Mauritania for rice. And we believe in this initiative, and the initiative to reach 1 million, in Takaful, AGFUND Alliance, and supported, and we will be working particularly with the small farmer, and not just in the Arab region, to go beyond also in Africa.
Thank you, Dr. Nasser. Sorry, didn't come on for a moment. Maybe I could just ask you a little bit of that last question that I also asked my friend here from Bank Negara. The experience that you're talking about, that you've learned from Sudan and Yemen and elsewhere about, how do you see, what are the ways in which we can translate that into an advance for Takaful in other places, in other countries?
Actually, we need help now. Imagine today, that's such an an insurance for a small farmer is not available in the GCC country, rich in all insurance and everything, because the problem is facing the same thing face us when we talk about microfinance. The existing company, they care about big projects, and the system and the regulator are not aware to create a new mechanism to create special vehicle to concentrate in the micro insurance. Believe me, they are not even interested to do so. And this is one of the way because nowadays with the climate change is happening. So we cannot stop and say, no, nobody could insure them. And each country has a responsibility. When they assess the risk, either they retain it or pay premium. So for God's sake, why not? We make it available for those poor people. With a little money, they are insured. So probably this is going to be happened, and we will be talking to Yemen. We're sure Yemen is going to work. Mauritania, they are working. Sierra Leone is a country of Syria with the help of Dr. Abdullah, because as he mentioned, he talking about what we work together. He helped us at that time when he was in the government of Syria. He's the one who helped us to facilitate to get the first license in microfinance. Now the bank there is a lot of license and make it sustainable. And thanks God that we have a bank in Syria before the crisis, like Amal Bank in there, did not stop one day, because AGFUND believe in the private sector. That's why we create something called a non-dividend company dedicated to solve a human problem. No dividend, but they apply the same concept to continue. Believe me, if that's a project with not a private sector modality, that our bank in Yemen, our bank in Syria, our bank in Sudan, close now if there is any crisis. So this is one of the things should be sustainable, because the private sector is the only one should continue. When there is a crisis, they should stay there. They should protect their assets, they protect their country, not just make money when it's things safe. When there is a crisis, this is the only way we take risk. And this is the solution. Where is the solution? It's the insurance, for God's sake, for all of them.
Thank you, Dr. Nasser, for that eloquent answer there. May go to my colleague, Dr. Abdullah, if I may. So a question for you. UNDP as an institution is investing a lot of effort in starting up and supporting the startup of the Takaful Alliance alongside other partners such as AGFUND and so forth. And we have many countries interested, such as Malaysia, Palestine, Pakistan, etc. I'd like to ask you this question. So how do you see the Alliance in its ambition of 100 million people financially resilient by 2030, contributing to the long-term financial stability and resilience of countries? So not just the people. Is there a relationship between the personal financial resilience of 100 million people across the Islamic world, for example, and the financial resilience of the countries that they are in?
Thank you very much. Let me start by a story. In 2008, at the peak of the international financial crisis, a minister of finance of a G7 country, I cannot mention the name, was flying from Kuala Lumpur back to Europe. And she, well, that narrows down the options. She called me from the air and she said, I am in my small private jet and I need to refuel somewhere. Do you mind if I land in Damascus? Because we had few things to discuss anyway. And she did land. It was a very rainy day. I picked her up from the door of the plane. And we actually had a beautiful walk under the rain in Damascus, the old city of Damascus, where we visited the old mosque, the Saint Ananias church, and where Paul the Baptist was actually baptized. What did she say? She said, if only we applied what I saw in Malaysia, in the international financial system, we would not be today in this crisis. And she said, please don't quote me on that. So the robustness of Islamic finance is, I think, well established already. It's one of the fastest Islamic financial products growing in the world. I had a group of friends who set up an Islamic mortgage company in the US without calling it Islamic. All their clients were Midwest Americans. And they loved the product, and they've been faithful customers for the last 20 years. And they never knew what was that product. They thought this group of young men set up this thing. So that's why we need to insist this is a product for Muslim communities and non-Muslim communities. Every farmer community around the world believes in solidarity. They actually survive on solidarity. And the word takaful itself is mutual solidarity. So we, as UNDP, we fully believe in this. Now, we understand today from COP28 that almost $1 trillion has been spent in green financing, in climate financing. How much of that $1 trillion actually went to small farmers who are the backbone of sustainability, food security, efficient water resource management? Very, very little. Because the system, I mean, the mismatch between the demand and supply in that market is very clear and absolute. So what we want to do through this, why would UNDP be involved in an Islamic product, an Islamic financial product? But it is not an Islamic financial product, it's much more than this. It's a way to bridge the gap between demand for finance by small farmers and supply of finance, which is looking for opportunities and cannot find it. That's one. Second, we are the region that is most food dependent in the world. Our food security is totally exposed. 75% of our food comes from abroad, while we use 75% of our renewable water resources in agriculture. So if you put these numbers together, they don't match. One of the ways we make them match is to empower the small farmer, because of course, we need to do the big projects, the irrigation projects and all of that. But that's not enough. We need to believe in the small farmers, because if you take 100 years ago, we forget that up until the modern state was established, they provided us with food. And there was times when the Middle East and North Africa were the food baskets of the Roman Empire. And it was all about small farmers. There was no large farming and agriculture at that time. So what we need to do is trust in the small farmer again. Also be able to target financing, and therefore we will use knowledge and science to zoom in, like using artificial intelligence and geospatial data to zoom in on the predictability of risks where these farmers are, so we can design, tailor-make insurance products for them through Takaful. And therefore, I must say that for UNDP trying to reach 100 million people, it may sound like a pipe dream, but it isn't. It's an emergency operation. If you look at our water situation now, if you look at our food situation in the region, reaching 100 million people is a must. It's not a luxury. So working with AGFUND and other partners in this alliance, starting with the diagnostics, detailed diagnostics in the countries and in the region, and then actually using our 17 country offices in the region to actually help build the regulatory framework, the legal frameworks, the institutional capacities for Takaful will be a great step forward for those countries. Let me stop here.
Thank you very much, Dr. Abdullah. I'm going to hand back now. I'm going to say thank you very much to all of you. If I may just make one little comment. You mentioned about the diagnostics, and just to let the colleagues know, we have been doing diagnostics in countries on financial risk management around the world for our programming. So Algeria, Jordan, Egypt, also in the Islamic world, Bangladesh, Pakistan, Indonesia. I think those are the 6. And all of them talk about Takaful as a potential unrealized solution. Maybe if I could just offer one statistic, and the statistics you offered. Do you want to come back there?
I want to add one word.
Okay. I'm going to... Okay, so you go first.
Yes.
Okay.
Excellent. Diagnostic is the way forward. This is an excellent start of our work. We'll put all that diagnostics together and launch our programmatic work now. We cannot wait for too long. I must stress the idea that, yes, it's an Islamic product that should go to the rest of the world. And it's our duty as members and as citizens of this part of the world to try to send it. Our holy book says, وَمَا أَرْسَلْنَاكَ إِلَّا رَحْمَةً لِلْعَالَمِينَ. We are a mercy to the rest of the world, right? So we need to make sure that we apply and live up to that expectation. And that's why UNDP in the region believes in this and will work on it. Thank you.
Thank you. Actually, I will not come back from that because that's a perfect way to end the panel, if I may say. So if I'd like to hand back to Syed, our MC, just to take us through to the end. Thank you.
So thank you very much for the very insightful discussions. And, you know, like Jan, you mentioned COP27, we had some discussion. We are here today. Now we are with more partners, so let's see what happens in COP29. Maybe some more outputs, more deliverables. I just want to quickly take this opportunity to also thank the author, the project technical team, the internal reviewers, and the external reviewers of this report. All of them are not with us here today, but of course it has been a collective effort for almost a year.
Yeah, UNDP and AGFUND just remind everybody and you that COP16 will be next year in Saudi Arabia. So we want to take this opportunity because AGFUND, UNDP, and of course AGFUND already signed an agreement with the UNCCD to be partner with them. We met the deputy. So, and this is talking about land, you know, because today there was a big debate talking, if people know that there is 3 parties in the agreement. Do you know about COP28? What difference between? There is not a lot of issue about it. So COP16 just about the land, the certification, about the small farmer. If you want to help the small farmer, you have to help the land. So probably this is one of the issue, huh?
We should have a big event. COP16.
16, yeah, and we are working in it, by the way. And the AGFUND International Prize goal number 15th, which is the land. And now still the nomination is open. Please, if there is an excellent project, go along with the helping the land, helping achieving the target of the goal number 15. They will come to receive your nomination. The awarded will be in Saudi Arabia $1 million for the best project among. And we invite all of you gonna be in. Sorry to interrupt you, but because this is an important issue.
You invite us to win the $1 million, or?
This is, Islamic Bank and all products, by the way, we welcome any product. We cannot decide, there is a process for it. And there is a certain criteria, you nominated the process, and the jury will decide who's the winner.
Thank you very much, Excellency. But now to tie this all up and to also open the horizons, I want to invite on stage our Acting Director General for Global Practices and Partnerships, Mr. Amer Bukwish, to sort of give some concluding remarks. One interesting fact, I like to tell interesting facts about everyone. So he had been before a CEO of an Islamic bank for more than 17 years. So from a practitioner's perspective, so please come and help us conclude. Thank you.
Thank you very much. I think this is a very challenging thing is to close. I didn't know that. I should insist on opening, not on closing, because on closing you have to reflect on all brilliant ideas that were mentioned today. I would like to thank the speakers and the panelists, both who were in person, those who contributed, those who were also with us and online. Thank you for exploring the potential of Islamic finance and Takaful to support the resilience of the climate shocks. All what was mentioned today would be also recorded and would be to the benefit of many researchers that would be studying what was said. Risks today are multidimensional. We have different risks. Besides climate, we had recently witnessed COVID. We have witnessed different kind of crises, from the crisis in Eastern Europe, Ukraine, Russia, now Gaza. We are facing a very challenging times. And IDB has 31 fragile countries out of 57 member countries, which actually is the majority of our countries are in stage of fragility. So what was interesting in the report that I heard Brad saying that 2.7% of damages are actually insured, which shows that very little, and the space is huge for growth. So we have a big need. And we should also look of what was mentioned by Mr. Abdullah Al-Dardari on the value of Islamic finance in itself. The value of not going into, Brad was saying, riba, garar, and maisir. This value is not only for the financial inclusion of the Muslim societies, but also for the expansion to others. And I think Takaful has a huge potential. And we have proven this, as mentioned by Brother Said. I have been running an Islamic bank in a multi-dimensional country with different groups, different religious groups, ethnic groups, and it became the fastest growing financial institution in the market, not only to the Muslims, but also to non-Muslims. To prove what Mr. Dardari was saying. It became the fastest growing bank among the Serbs and the Croats. So there is a value not only for financial inclusion, which is huge, because many of the Muslim communities would not go into insurance. And then we would have a problem, how to deal with the climate effects around the world, because close to 2 billion people, many of them would not be willing to go and insure themselves unless we develop Takaful. That is one. And financial inclusion was really, I was carefully listening to Dr. Nasser, referring to them. And the second is also deriving the benefits of Takaful to others as well. So overall, we have a huge task ahead of us in a very challenging environment to meet the very huge unmet demand to address the most climate vulnerable areas. I was also very impressed with one of the statements of Brother Dardari, saying that reaching 100 million people is not, it is a must, it's not a luxury. I think this is something that it is very, very deep. And we wish you all the best in the common goal that we have. For the COP16, we wish you all the best in Saudi Arabia. And tell us how to win $1 million. I think there will be a lot of interested parties on that. But wish you all the best.
Thank you.
And coming back to the study that has highlighted the challenges related to issues such as perception and operational and technical limitations and regulatory and legal barriers. In response, it has identified opportunities and distilled 4 recommendations for further work around policy, national strategy, sovereign action, and public-private collaborations, which our respective teams will follow up on. I would like to particularly thank the United Nations Development Programme, with whom the Islamic Development Bank is partnering on this project. The UNDP is a valued partner of IsDB, and this project is an example of the benefits of collaborative efforts to raise the profile and understanding of an Islamic financing product with latent potential to benefit many. Also internally, I have to say that this knowledge product highlights a One Islamic Development Bank group approach, with collaborations with our Islamic Development Bank Institute, which leads on knowledge development within IsDB, and the Islamic Corporation for Insurance of Investment and Export Credit, or ISEC, how we call it, which leads on the insurance aspects of IDB. So this is a way to show that the SDG 17, if I'm not mistaken, that partnerships is the way forward. And the multidimensional risks that we are facing, we have no other alternative than to work together. Even if we do work together, we really have to be very good, effective, and efficient to meet the growing problems around our member countries and around the world. So once again, thank you and wish you a successful COP28. And I wish all of you to win $1 million in COP16 in Saudi Arabia. Thank you very much.
If I may.
Go ahead.
This microphone on? Is this microphone on? In just continuing the mildly rebellious nature of this event, undertones, rebellious undertones, not overtones. We do actually, we'd like to do something additional, if I may, just as part of the work that we're doing on the Takaful Alliance. We've already had a few interesting and useful steps. So we had a first round table hosted by the Kuwait Finance House in Kuwait in September. We had the second round table hosted by our friends in AGFUND, alongside the Men at Climate Week, which I think was October. It seems like years away, but I think it was October. And we already have, by the way, 170 different people working for about 120 different institutions, governments, public and private, development sector, already interested and part of our mailing list. And one thing we'd like to do right now is enshrine in front of the cameras, the first, if you like, agreement of moving forward with a roadmap towards delivering what the alliance will look like over the next year, and that's an agreement between AGFUND and UNDP. Dr. Nasser, Dr. Abdullah, we have a little bit of a signing ceremony. Not quite sure what the mechanics are. I'm going to hand over to my colleague Mohammed, perhaps, to work that out, if we could just do that. And then I do apologize, Syed, for taking over there. I'm going to hand it back to you in a moment.
Okay.
Thank you very much. I think a round of applause for that. Thank you, thank you, thank you. So if I may hand back to our... Oh, we will do a photo.
Yeah. So thank you very much. Please stay back. We'll have a group photo on stage before we formally conclude. May I invite all the speakers? Please join us. Dr. Alvar, Brad, Lauren, please join. Okay, all right. Yes. Okay, now we'll have a group photo. Please have all the speakers. Lauren, Brad, please join us.